Good morning, traders. It is 8:03 a.m. Chicago time on Tuesday, the 31st of May, 2016. Hope you had a restful long weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at where things are overnight, quite a few numbers had come out. German unemployment's at a record low. The unemployment rate in Germany fell to 6% in May, down from 6.3 in April. Eurozone is still in deflation. Consumer prices in the Eurozone fell to 0.1% year over year in May, according to the latest Eurostat. Um, the lead remains for the remaining party or the remaining contingent in the Brexit polls continues to lead 51% versus 46%. And then just recently we got the personal income, April personal income in the US, 0.4 in line, the PCE deflator 0.3 in line, and PCE core 0.2 in line. And then Canada came out with GDP that was lower than expected. Expected negative 0.1%, and they got negative 0.2. And of course, just 4 minutes ago, we got the S&P Case-Shiller 20 City Housing Index 0.85% versus 0.8, slightly stronger. So that's how things have shaped up here recently. Since it's not really Monday, it's Tuesday, the beginning of the week, we want to look at the rest of the week and figure out what is in control, what's ahead that could control how the market trades. And currently, this week definitely has a lot going on for it. Today, there's quite a bit. We did cover quite a few before the open. Right after the open at 8:45, we have U.S. Chicago PMI. I want to remind you that this number comes out to subscribers early, usually around 8:42, 8:41 a.m. Central, 9:41, 9:42 Eastern. The expectation is 51.5. We get the rumor around the time it comes out. We have consumer confidence index at 9 Central, 10 Eastern, expecting 96.2. And then on Wednesday, we have the manufacturing PMI at 8:45 Central, 9:45 Eastern. And then we have construction spending, ISM manufacturing, ISM prices paid. We have the beige book at 2 o'clock Eastern on Wednesday. Thursday, we get the Challenger job cuts early on at 7:30 Eastern. ADP employment numbers at 8:15. ISM New York at 9:45. We get crude oil inventories late on Wednesday at 11 o'clock instead of 10:30 because of the holiday. But we also get Feds Powell and Kaplan speaking. On Friday, we get the China Services PMI. But on Friday, we also get the U.S. non-farm payrolls, private payrolls, hourly earnings, and unemployment. We also get trade balance. We get services PMI final on Friday, factory orders, and ISM non-manufacturing, just in case you're not getting enough economic releases for one day. Friday is going to be a showstopper. But just to look at the extended forecast, also the week after that, the biggest number we have really is consumer credit and wholesale inventories, as well as the monthly budget statement. But the week after that, the week of the June 13th through the 17th, we have retail sales, advanced import prices, business inventories, but most of all, or most important of all, on the 15th of June, we get the FOMC rate decision, the 15th of June, and that's the one that recently many have been talking about. So that's how things are shaping up for this week and for the coming weeks. As far as what we expected on Friday, I'm not going to cover what was expected on Friday. You can go back and watch the video from the 27th and see how things play out. You also have charts, and you can always go to YouTube and look at it. What's more important for me right now is to switch over and look at how things are shaping up currently, and I want to do a sweep on a weekly basis. I do a monthly, weekly, daily, hourly sweep and create these flex levels, these seemingly noisy levels, just because there's so many of them now because we've been trading in balance for so long. But in general, I'll look at the monthly profiles. These are the monthly profiles. Here you've got April. Let's see, let's enlarge this. Here you've got April, and this is May. And you could see that with May, we opened here. We opened right here. We've gone down. We've pushed through April's low, ending the monthly one-time framing. Let me change the color to something that you can see. So here we go. So we took out the low of April. So we ended the one-time framing up on a monthly basis. This was a big move, or a big feature for the bears to end the one-time framing up. Today is the last day of the month, and today is the chance for the buyers to kind of take that territory back and cancel the fact that the one-time framing has ended. One-time framing is market profiling's way of describing trend. And in order to end it, we have to take out 2105 and a quarter. We're not far from it currently. It's only a few points away. Currently, the S&P is trading at 2100.5. It got up as far as 2103.75 on the overnight. The overnight low is 2096. So not very far. And then in the process of building this monthly profile, we really left a lot of gaps beneath us. We'll see that in a second. We left gaps beneath us, and we traded the living heck out of this area down here and have moved away. There's a lot of energy that was built up in this high volume area that has dissipated to the upside. It could only dissipate to the up or the downside. It chose the upside. So the bulls are in control. So on a monthly basis, that's how things are shaping up. Things get the sellers might get an advantage here below 2084 if we get down there. Otherwise, it's 2105 is the number we're gunning for. Looking at the weekly, so shooting from the monthly to the weekly profile, so we can see that last week was trending down. We continued to trend down. We had a lower low the week before that, the week of the 2nd. Then we broke it and went higher, low, higher, high. And then we ended up pushing back down and creating a one-time framing down situation again, continuing this trend down. And then last week we absolutely took that out and left all of these gaps beneath, multiple gaps beneath us. I think currently we have 3 or 4 gap zones. We'll look at them in a second. And you can see that there's an excess low on many of these days. An excess low is one where there's a thin set of TPO or letters in the profile. You can see volume here is very anemic, and so prices were considered really cheap below that 2069.5, which by the way is a key figure now. 2069.5 is a big one to mark on your charts if you haven't done so already. The trade is in favor of buyers above that price for quite some time. So this is how the weekly shaped up. You could see that last week, even though it's going into a holiday week, last week is incredibly unusual. And I'd said that. I hate to sound like I'm copping out with the activity that we've had. But if you go back in time, you won't see a week that looks like this, that has these voids in it. You can get a week with a gap zone, usually after a news event. You see there and there we have these gap zones, but you hardly ever see a week where you go from a compressed day balance to a trend day up after a gap to another gap with multiple days just pushing higher and higher and higher. The feeling that last week had is that there was news that we have not seen yet or we're not aware of yet. It just seemed to trade that way. There was news on Friday after the close. The Japanese government announced a 90 or so billion-dollar QE program increase in their QE, but I'm not sure if that's the driver. In any case, the week closed at the high, and again, we don't include yesterday's data. Yesterday's a holiday. That data is scrubbed out of these charts. We don't look at it at all. Okay? So, here's where we are currently. We're still inside of that big balance zone from the 30th of March. Let's kill these lines. Okay, we're still inside of that balance zone, and what have we done in this balance zone? We've pushed the high, we've pulled back, lower high, gap down, lower high, pull back, attempt a reversal, higher low, looks corrective, and then it fails down, then it pushes up, and then all of a sudden it gaps up, and over the span of 5 days, it basically crossed this entire high volume node here. And that's, again, as I said, that's unusual. So I'm expecting new highs now very easily. And like I said, we're very, very close to new highs as we sit right now. So when we zoom into the week here, we have several balance zone within balance. We've put one in down here. Got that marked right here. Okay, with the 2049.75 right here, 2049.75. Then we have a little gap zone right there. Gap zone, it's marked with a gray right there. And then as we move up, we have another gap zone. We have a trend day. Then we have another gap zone right here. A strong push up, balance for the day. Lots of volume, and this was the last day. This here was the last day that had normal volume. This day here had about 783,000, and this day had 800,000, which is a lot less than what we would consider to be normal, which is about 1.1 million contracts on the pit session. And so we balanced here for 2 days. We balanced for 2 days, and then we start moving up again. On Friday, it came back to test the point of control, close to the point of control of balance, and then it finished on highs. And then over the weekend or over the Globex session last night, it pushed those highs up to 2102.75. Okay, so actually pushed them up to 2103.75. That's the high of the session, but because of the holiday, these things get a little bit messed up. So we're very close to the all-time high, which is right here, 2105 quarter. And looking at the overnight session, we're getting to it. We're getting to these hypotheses. This is getting a little bit long. As I said, it's the beginning of the week. These trader bites tend to be longer. So we see here we gap up on the open. After we get rid of yesterday's data, we gap up on the open, we test into Friday's range, and we're trading now above and are holding in this above the mid in this point of control, leaving us with an odd place to start. So for the primary hypothesis today, it's very difficult to tell what we're likely to confront coming in. Uh-oh, someone's in trouble. What we're likely to confront coming in here, but the market's opening around 2100. The expectation is a struggle up here. I'm looking for a response back down to 2096. Get down into the singles, get down into the support here. Pretty decent support down at 2095, 50, 2096. And then I'm looking for it to continue higher and to push the all-time high at 2105.75. That would be hypo 1. That's the main plan for the day and the most probable plan for the day. Otherwise, hypo 2 is likely to struggle up here, test higher, find its sellers, and then respond back. Once it responds back, I'm looking for a bounce around that 2096, which is support. But if it falls through, then I'm looking for 2093. And then it opens us up for a test of 2087, which is the point of control of these 2 days combined. These are two. This is a micro composite area here, and so I'm looking for a drop down to 2087. That would be hypo 2. Hypo 3, because we're opening, we're still just on the edge of balance, and we're opening right up against all-time highs. Hypo 3 essentially pushes, is an open drive or an open test drive type behavior, and pushes straight up, takes out the high. And if that is the case, then we're likely to push to this double measured move. And so I'm looking for a trend day on hypo 3 and 2114.75. Again, this is a double measured move target up here. These are two different swings that are being projected up and are giving us 2114 and a quarter, 2114.75, and that becomes the main target for hypo 3. Okay, so that's how things are shaping up. And as usual, a day like today, right after the break, you'll want to take it easy and just see what the market's got in it before you commit. And then once you commit, make sure you let your trades play out as opposed to micromanaging them, interfering with them, and so on. That's my advice to you. Good luck with it today, and I'll catch you tomorrow morning. Take care.